Hello, and welcome to Mortgage Solutions. I am Mark Rigney, your host, along with my friend and co-host Jim Perkins. On today's show, Jim and I are going to talk about how to get qualified to buy a home in the current economy and what a consumer should expect. Specifically, we will discuss the changes that have taken place over the last few years, the necessary qualifications for getting a home loan, and the process you will go through when applying for a mortgage. Now, with so much money on the line, it's important to understand the mortgage loan process before you're involved in it. There are several key criteria we need to talk about because they all relate to getting approved for a loan. Now, mortgage lenders will look at many different factors when you apply for a loan, but the most important ones are your credit score, the amount of debt you're currently carrying, your income relative to the amount you want to borrow, and the size of the down payment you can make. Now, those are all very important factors, but there are other things to consider when getting pre-approved. Let's talk about some of those other things as well. Jim, why don't we start by going over some of the other important issues that we need to talk about?
Sounds good, Mark. I think one of the first things a person should look at is to find out if the person that they're talking to is a licensed mortgage loan originator.
Why is that important?
Well, because you have banks and credit unions that are not required to have people licensed that can be talking to you. And this can lead you to problems up front and then also down the road. You want to make sure that the person is licensed, and the reason is because the licensed person is going to have more education, is going to have more training. They have to take national and state tests for the areas that they're taking the loan applications in. Right. Sometimes you'll be if you're dealing with a bank or a credit union, the person that you're speaking with does not have to be licensed. And so they may not know all the programs that are going to be available to you and not be able to prepare you as well in order to make your loan process as smooth as possible.
Yeah, a mortgage loan license originator has to have continuing education. They have to continuously be brought up on the current trends and what's going on in the market with the new laws and regulations, correct?
That's a good point, yeah, because they start out getting so much training to get the license, and then they have to get the testing for the national and the state, and then every year they have to do continuing education. So that means if the person is a licensed professional, they're going to be able to have the knowledge for the programs that you're going to need in order to get you through the process and get you the loan program that you want.
In your experience, how much does personality play in the part?
I think a personality is going to make a huge difference in the process. Right. It's going to reduce the stress level. If you think about it, if you're getting pre-approved for a loan, which you should do before you actually go out and make a purchase or put a contract on a house, what's going to happen, and through the process, you're going to end up dealing with that person for a minimum of 60 days. So you want a person that you can get along with, that you can talk to, tell them your concerns about maybe a particular type of program or your particular situation, and that you can bounce ideas off of. You don't want somebody that you're feeling is brushing you off or not spending time with you on the phone or not answering questions or trying to push you into a particular program even though you may not feel comfortable with that program. So the personality is going to make, I think, a huge difference for the process and keeping your stress levels lower. Now, I know you do this, Mark, and so do I, but you say that 60 days, but in our business, we try to develop a relationship that's going to last a lifetime. Right. Because through a lifetime, a person's just not going to get one loan. They're going to get many loans. They're going to buy probably three or four different houses.
Cousins.
Exactly. They're going to do refinances and stuff. So we want to be there as information source from them and help them even after the loan closes. So if you develop that relationship, you got a good personality mix with that person, then you're going to feel comfortable calling them 3 months, 6 months, a year after the loan closes and says, hey, Jim, or hey, Mark, I've got this issue on my loan. Right. The escrows don't seem to be right. Can you look at this for me? And it works out really well. So personality, first thing you want to do is make sure the person is a licensed mortgage loan originator, and second thing is make sure that the personality is a good mix with you.
You mentioned stress. A purchase transaction more than refinances can be very, very stressful. A lender may request documents up until the day of closing, possibly.
Exactly. With all the new rules and regulations that have passed in as recently as the last 3 weeks, you're seeing that a lot more documentation is required, and some of it has to be within so many days of closing. So that can put the stress levels very high.
Right,
and one of the things that a licensed professional is going to do is going to explain to you the process up front and set your expectations so you know exactly what's going to happen through the process and get an idea of not only the information that they're going to need, but why it's being looked for. And then that way, when they come back and ask you for a particular piece of information, you'll have already have it, or it'll be easy for you to get because you've been prepared for this, so it's not a hassle. So your stress level is a lot less than if it's all of a sudden a big surprise to you, because you know what's coming.
Right. Yeah. It's been my experience that it's very, very important to keep the lines of communication open with your borrower and even the agent. It's very important that your borrower give you full disclosure of what's going on in his life, what his needs are. It's very important that he not keep information from you that may derail the process later on down the line.
That's absolutely correct, because basically what we're going to try to do is put together a strategy for them. Now, they may not be able to qualify for a loan today, but we're going to work up a scenario for them of what they need to follow in order to get to that loan 3 months from now or 6 months from now. Or if they're in a situation now, we want to look at all the concerns or all the situation that they have so that it's not looked at by an underwriter a month or 2 months down the road, and then there's a big problem. If we address it up front, usually we can structure it in such a way that it's going to go through the process with the least amount of stress.
Right, right. You mentioned licensed. I feel as though it is very important that you deal with a licensed originator, because there are different types of loans and programs that's going to require different types of documentation. Like on a purchase, there's going to be a contract involved. On a refinance, there would not be. On a VA loan with zero down, you're going to have to provide a certificate of eligibility and a DD-214, as opposed to a conventional loan, you won't have to provide those documents. So it's very important that your loan officer is very knowledgeable, because he's going to know what documentation are required for what different types of programs you're applying for, correct?
That's exactly right. You're going to have a basic standard of certain types of documentation that we're going to need. We're going to need things like your pay stubs covering the last month, your W-2s for the last 2 years, tax returns for the last 2 years, and bank statements. But those things, and then there'll be other additional things, but that'll be the baseline to start, so we can start the analysis process as far as getting the loan, get you approved for a loan.
Right.
But we're going to get that information, and then we're going to explain to you the reasons why we're getting that information, what we're looking for on that particular information, and then what you might be able to expect further down the road when an underwriter looks at it, or before we actually get it to the underwriter. So those type of things, especially the tax returns. Now, sometimes you'll have companies that won't ask for tax returns, and I know that I always do, and I'm pretty sure you do, Mark, is that because they're required to get transcripts from the IRS.
Right.
And then what we do is, if we have the tax returns, then we can address any concerns that might be on those tax returns that might affect the income that you're going to be able to qualify for.
Yeah.
So if we do it up front, as opposed to when we get those transcripts, we're going to be a lot less stressful for you than if you're already under contract trying to buy a house.
Yeah, and during this housing crash and economic recession that we're currently in, the federal government has increased the regulations triple-fold on us. That's why it's so important that your loan officer is licensed and very knowledgeable about what's going on in the current market.
There's no question about that. It has to be one of the priorities, because you'll get a lot better service that way, and the person's going to know the process usually from the beginning to the end.
Yeah.
So they'll be able to answer any questions that you have, as opposed to somebody just taking some information and then just passing it off to somebody else that you're never going to even talk to, or never even talk to the person that interviewed from the beginning. So you're not going to have the continuity of a person knowing your whole situation from beginning to end,
Right.
which is going to make it run a lot smoother, and there's going to be a lot less stress for you and everybody involved in the transaction.
Yeah, the next step to the process is a very, very important piece of the puzzle, and that, of course, is the credit report. One of the things I like to do upon pulling a credit report is to sit down with the borrower and review every item on that credit report. Oftentimes, there are erroneous and derogatory information that should not be on the credit report that can be cleared up. But it's very important you sit down in the beginning stages and review the accuracy of the credit report.
That's exactly right. And we try to get that after we get the documentation, like the pay stubs and the W-2s, because we don't want to just pull the credit report willy-nilly. Let's pull your credit report, because those inquiries can have an impact on your credit scores, which can make a difference on what programs you might be able to qualify for. So once we look at that information and say, okay, you're lined up, you should be able to fit into a variety of different programs, let's pull your credit now. Well, get that authorization and pull the credit. And it's very important, either sit down or do it over the phone, where you can go down line by line and verify the information on that credit report. Verify, the previous employments. Verify, the most important is going to be the debts on there and any type of collections or judgments that might show up to make sure that they're actually the person that you're talking to.
Right.
Because credit reports are filled with a lot of erroneous and inaccurate information, and it's important that we're looking at the most accurate information, especially when we're trying to get somebody qualified for a loan.
It's been my experience that after we obtain the credit report, after we obtain the documentation from the borrower, I like to combine that information and analyze it to see what the needs of the borrower are. From that analysis, I may be able to ascertain that there's not a lot of funds for closing. We may need to advise the real estate agent that the seller is going to have to pay the closing costs. Our borrower cannot do that, cannot afford it. That's why the analysis is so very important after you gather that information together.
Exactly, because then you're starting to get a complete picture. And what we want to do is develop a strategy for that particular borrower, especially like in a purchase, that's going to make them stronger. So if they're in a situation where they don't have a lot of funds and they're getting to write a contract right now, just like you had suggested, we want the seller to pay, a lot of the closing costs or all, if we can fit it into that program, then that way the borrower has to come up with less money. But also too, if they're not writing a contract right now and they're continuing to look, we want to emphasize that their weakness is the amount of funds that they have available. So they might be trying to pay down debt, which might not make any difference in their qualifying.
Right.
Whereas not having enough funds could limit what they could be able to qualify for. So what we would focus on is say, listen, what you want to try and do is try and save as much money as you can, because you can always pay down the debt. But once you pay it down, you can't get it back to make a larger down payment on a house or pay some of the closing costs that you might need to in order to be able to get into the house that you want to.
Right, which alludes to the point I made earlier of how important it is to have open lines of communication, even with the agent. You've got to be able to tell the agent where the borrower stands, what the borrower can and cannot do, what their legal ramifications are, and what's going on with that.
Exactly, because when your communication is open, not only with the borrower, but then you want to be able to talk to the agent, and the agent, and most of the time, I know you do this too, is that when they get ready to write a contract, we have them call us, even if it's on a weekend, because we're always available.
Right.
And then what we can do is talk to them about what they're trying to do as far as that contract is concerned. What's the sales price that they're looking to offer? What the agent believes the actual value of the house is, and can we get the seller to pay closing costs, or do we need to have them increase the sales price a little bit, or can they go with a lower sales price and have the seller pay some or all of the closing costs?
Right.
And then we run the numbers so they know exactly what their payment's going to be, and also how much money they're going to need from beginning to end. So that way, kind of bringing all the pieces of the puzzle together.
Let me expand upon that a little bit, because at this point in the juncture, it really becomes a balancing act. You're trying to meet the needs and comfort of the borrower and consumer, but also trying to see what programs they qualify, where they fit, where is the happy medium for all parties involved.
That's a really good point, Mark, because when we do the analysis, we're basically coming out with a lot of programs that will work for that particular person.
Right.
And then what we want to do is try to filter those out based on the needs of the individual or the borrower, and then filter out even more based on their comfort level or their comfort zone.
Right.
So we're coming down to a very maybe one or two programs that are going to fit their needs and also their comfort level. And based on the market situation and based on their situation, we'll determine what that program ends up to be. But that's really important. And then, if the borrower has somebody